Traders, welcome back to our price action trading lesson. In this video, we're going to talk about how to use and combine price action rules to help us predict where the market is going to go and where are the high probability setups. We started with some consolidation. We have a nice downtrend working lower. We're breaking the downtrend, but more importantly, most breakouts will fail, and the breakout is failing and it's about to test the breakout area. But the supportive indicated 1-bar EMA is in the way, and we have new low, one rejection, market is correcting, and we have second rejection, double rejection at the EMA. Prices will not fully go and test this breakout area simply because the EMA is in the way. You can see new low, first entry short, pull back, second entry short. This is a breakout, pull back. The downtrend needs to get new extreme. This setup would be a great setup, but the signal bar is an inside bar, which we don't like. Inside bars, they're not ideal. If you don't have an inside bar, you can sell. Because I have an inside bar, I'm not going to take it, but the downtrend needs to get new extreme according to rules. Breakout, pull back, double rejection at the EMA is indicating, okay, sellers are back in the market, and we expect market to continue working lower. We have a lower high here, but actually you can also consider as a second entry one, but it's so far from the EMA and we need to sell close to the exponential moving average. We have a new extreme, but the market continues to trend lower strongly. And I have to ask myself why the push down is so much larger than the initial downtrend. The downtrend is really getting stronger and stronger, and at this point it looks like we are evolving into another wider channel. So I'm going to draw wider channel like this, and the bias right now still remains bearish. So once we traded so far down, I'm only thinking about selling. I'm not thinking about buying. I want to see a high probability setup. This was a high probability setup, second entry short to like a pullback, lowest low, first entry short, break below, pull back, and now we have second entry short again. Second entry short at the EMA while the downtrend is in play, and this is great. High probability setup, second entry short at the EMA new low, first entry short, also uptrend played out with the break, push to a new extreme, and the trend down is getting quite strong. Decent signal bar, worked enough for a scalp, 3 points, and the market corrected, but more importantly I can see double bottom. So I have a double bottom, so this means count reset. I need to reset the count. We are breaking the downtrend. Is our analysis changing? No. We are breaking the downtrend, but we still expect new low to be tested following the trend line rule. So I'm going to reset the count. First entry short because we broke below this bar low. Can I get a second entry short? No, because we didn't have a break above this bar high. So the first entry short, if you're going to place your stop loss, you can see is still in play. So there is no pullback. First entry short was not stopped. So there's no second entry short just yet, so I can't really take it. Can I get some second entry short? No break here. And we already have a break and push to an extreme. You can see this low is lower than all of these lows inside the channel. You know, it's a shame this lower high formed after new low is made, which means I have to treat it as a first entry short only. If this low right here is higher than the low I'm counting from, this would be considered lower high. But because we have a count reset again, this is first entry short only, so I can't really sell it because you want to sell when the counting low has not been broken yet, if that makes sense. And market keeps working low, so you're breaking new extremes. So going to trend line rule, I'm pausing looking to go short, but I can see that the market keeps going lower. We have a new low first entry short, and why the first entry short is working and why are we trending so far down? Look how far down we're going. Okay, the trend down is looking very, very strong. Once you can see only first entry is working, this means that the trend is getting quite strong. So what I like to do is I like adapting to even wider channel simply because the downtrend is continuing after breaking extreme. First entries are working. It seems like a continuous push down. We can't really go above EMA for a long time. So the downtrend is the bias. So this is how are we able to understand what is the bias and predict where the market is going to go. So now that we identify the pattern, the rules are still the same, just like here. We have a downtrend, so we want to sell a high probability setup at the EMA. We want to see the two-legged pullback. Lowest low, first entry short, pullback, second entry short at the EMA. It's a little bit of a doji bar, but when the trend is strong, you have to be taking a bit more aggressive setups. One leg break, second leg, break a new high. I like this setup. This is a great setup. I took it, small risk. Even though it didn't form perfectly, once the trend is strong, you know, the market is just going to keep going lower and you have to be taking a bit more aggressive setups. So decent setup, second entry short, and market keeps working lower. So these second entries are powerful. This is where the correction phase will end if the key entry point is holding. New low, first entry short only. Count reset, so I can't really take it. Market is correcting, and now we have some stronger correction. We have a break new high. The downtrend needs to get new extreme, but I cannot sell above EMA. Why? Well, because this is not EMA get bought, but more importantly, I don't know how deep the correction is going to be. You want to have confirmation. The push below EMA, that's the sign that the sellers are stronger, they're back in the market, and they're about to test the new extreme. If you are above EMA, you don't know if bulls are still in control or not, and we don't want to be guessing. We want to have rules, we want to have an edge, we don't want to be gamblers that are guessing. That's important. So don't jump the gun. Okay, we're still above EMA, no trigger here, and market keeps going higher, and EMA keeps holding, and EMA keeps holding again. So here, this was a little bit confusing. I'm forced to withdraw wider uptrend like this because the market is telling you something. EMA keeps holding, series of high highs and high lows. It looks like there's not going to be new extreme because this uptrend is too clean. The EMA keeps holding every single time. So the more I'm observing this, the stronger this correction is getting, the less I'm thinking there's going to be new extreme. So a little bit of a confusing area because I can't really just go long instantly on a dime when we traded down so strongly. Break, a new high, okay, uptrend played out. Market has new high, first entry long, pullback, second entry long failure. You know, this is a failed second entry long, which in hindsight makes sense, but you can make a case for the trend to be just a tad wider like this, and you can see at this point you can't really take it. You know, I can't really take it, it's a bit too early, but hopefully it makes sense why I'm no longer expecting as much new for this downtrend, because this uptrend was too strong. This is not what is supposed to happen, okay? And this downtrend doesn't have confirmation, so this could have been just prolonged bearish pressure. Either way, now my focus is mainly on the short-term price action, so I'm going to redraw this downtrend right here. Felt second entry long worked. First entry short only, no second entry short, break a new extreme. Here what I like to do, I like drawing slightly wider pattern. It's because we mainly traded down. This uptrend is smaller bias. If I'm going to really zoom back, the downtrend was the stronger pattern, so I like to be expecting a little bit stronger bearish pressure to the downside for this reason. But we have overshoot, and I definitely need to respect the correction. And remember, when you have two legs down like this and you're drawing the wider channel, it's the secondary channel, and you want to be extra sure it's in play. So you really want to make sure you're not rushing to trades. We have a second entry short, but I can't take inside bar, uptrend is in play. After overshoot, I need a lower high confirmation setup, break a new high, and this is quite tempting. This right here is double trap. Double trap. All the second entry short sellers got trapped. Break, new high, uptrend played out. It's tempting, not a bad setup, but because the context is not as clear, I find it a little bit more aggressive. A break below EMA and lower high would be better. And now we have push below, one tick higher, so there's a first entry long, counting from this high, first entry long failure. So this right here is the lower high confirmation setup of the double trap, of the fact we're going to get new extreme, and this is decent high probability setup. So you can see if you wait a little bit longer to truly make sure your wider downtrend is valid, double trap is the confirmation and the lower high is the ultimate confirmation. We need to get new extreme, break a new low, downtrend played out. Market keeps going lower, massive spike above EMA, and prices keep going higher, so I'm going to redraw. Uptrend working higher, something like this. We're correcting. Now, it's a little bit difficult to see if there's a break a new high or not, because I can draw it wider, it's in play, or I can draw it tighter as you have a break a new high. So what is the right play here? And for this solution, you need to zoom out and understand the overall concept, because we have first leg here. If you're going to go on a higher time frame, it's much easier to see. We have one leg up, break, second leg up, and because this looks like broad two legs, and you can see once again market moves in pairs of twos, one leg down, break, second leg down. This is why we are discussing these two-legged pullbacks. Because we reached the measured move, broad two legs up, it makes sense to be expecting more break a new high, because this doesn't look like a nice trending structure. Just broad two legs, measured move was reached, volatile spike up, and the fact that you're breaking below EMA is confirming the fact, okay, the EMA can't even hold. That's important. Sometimes you can decide whether it is a break or not, just at the last moment based on how EMA is holding. Once I can see EMA not holding, this gives more weight to the fact that we have breaking high. So EMA is not holding, measured move. We can redraw via the downtrend because we can expect reversal. And this is interesting. This right here is a failed second entry long, very tempting setup because this is the reversal pattern. 2 legs up, uptrend played out. We're below EMA, great signal bar, but it was a little bit too bullish. You know, you're kind of selling in a no man's land. There's no key level, no nothing. You're relying on the measured move, but more advanced trader can consider because it is a failed second entry long below EMA. Market keeps going lower. We have overshoot, okay? We have overshoot, which means we can have stronger pullback in the opposite direction. So this is what we do. We're just following the short-term trend lines. Now, because the big picture is unclear, following short-term trend lines, that's the best bet. I was thinking we're going to get the new low tested, but you can see how far up we are retracing. This is normal. This is due to overshoot. It can generate stronger pullback in the opposite direction. So I cannot sell second entry short above EMA. Didn't even get a trigger. Break, new high. No good setup here. Can't go long, can't go short. You have a second entry long, but you know, the wider channel, you can make a case. New high first entry long, second entry long. Problem is, there's a chance the downtrend may get new extreme tested. You know, we have a break a new high, a little bit more aggressive. Okay, market is trending lower. I'm going to draw the short-term downtrend like this. No entry here. We have a congestion inside bar. No nothing. We have 10 bars stacked right next to each other, which is no trade zone. Congestion. Downtrend needs to get new extreme. But we have no trade zone here. I can't take anything. You can see once you have overlap like this, you can't take anything. Break. New extreme. Downtrend played out. I'm going to go a little bit fast through this area because there is no good bias. You can see we're just whipsawing up and down. It looks too wedgy, spike down, spike up. So once it looks wedgy like this, it's very hard to be confident in your analysis. You need a little bit more confirmation. So once I can see wedge like this, price is going up and down. This is mainly an area of development. Market is a little bit too neutral here. Prices are working lower. You know, I can't take anything here. No setup, no nothing. Horrible congestion here. Inside bar again, congestion again, no bias, no nothing. So I just have to be careful. Nothing is happening. And this is important skill that you need to develop as a trader, is you need to be able to execute a trade when everything aligns. And you need to remain patient when markets just choppy like this, no bias. There is some support, but we have lower highs, conflicting variables, which means I have to be patient. And notice what suddenly happened. Market suddenly gave you a clear bias because this is such a clear, strong uptrend working higher. Now I'm interested because we have a brand new uptrend developed. It's clear one leg working higher. We bounce off of these lows, and now I can focus on short-term trendline rule for this uptrend. So let's see. I'm expecting new high according to trendline rule, but EMA needs to be holding. First entry long, second entry long inside bar. Of course, I cannot take. It's a doji, so I can't take anything. And you can make a case for downtrend being still in play. Now we have double trap, which is very tempting. Double trap here. I almost ended this, but you know, the downtrend doesn't have a clear breaking new low. It's also quite sketchy, so not a horrible setup. I can adjust the downtrend just a little bit like this. You know, more advanced trader can consider. But I still expect new high, and I want to see high low confirmation setup above the EMA. We're going higher. Double trap, your stop loss is still intact. And now we have high low confirmation setup. Double rejection at the EMA. EMA held here and here. Look at the tail at the bottom. Massive buying pressure. Uptrend is new high. This high low is confirming the double trap. We attempted to have a break, new extreme for the downtrend. And this is great hyper out this setup. Everything aligns here. We need to get new high. It's a high low confirmation setup. This setup is so reliable. We actually had similar setup not too long ago. I remember I shared a high low confirmation second entry long not too long ago. And these trades are so reliable. It made a quick scalp. You felt second entry short, but It's not full at the EMA, but we still expect to get the new high. I really love setup like these. You can see what a massive runner this would have generated. Easy trail. You can trail really tight and you can get 25 points on just one trade. These setups are so reliable. You can bet a house on this one because these high lows, when the EMA is holding and it's confirming the setup, you need to get new high. It's so reliable. If you can take only a few setups per month that look like this, you can make some decent living because these setups are so reliable. I love setup like these. It doesn't get any easier. When the context is this clear and the setup is such a strong confirmation setup, the signal bar doesn't have to be perfect. There's a tiny tail at the top, but it doesn't matter. Great tail at the bottom. Great context. Look at the massive runner. And this push up is quite strong, so we can also redraw just slightly wider uptrend. Because once again, the secondary leg is so much longer than the first one. The new high can reset. You can tell how bullish this looks. Market is correcting. New high, first entry long, pullback, second entry long. Combined with the triple test. So this right here is a second entry long. Also triple test. Great setup at the EMA. We need to get new high, and another great about this setup, break a new high, and now the market is about to close. So this is the overall structure for today. The only tricky area was this area right here, where pretty much everything is too sketchy, conflicting variables. It looks too veggie, so gotta be just patient a little bit, and a lot of setups on the way down, and a few good setups on the way up. So overall, decent trading day. This is how we use price action to help us predict where the market is gonna go, and where are the high probability setups. So I hope you had a good trading day. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.